Hi, it's Dave. Welcome to episode 240. This is going to be a live stream. I wanted to share what I think might be one of the most crucial insights to what I call 10x or generational company investing. And I wanted to share it live because I want to share it as soon as I can. Today I was thinking about this idea and it's really kind of crystallized. And I wanted to share the importance of looking for crazy outsized ambition in the CEO, and how this could actually be one of the core kind of first principle ways to find a great 10x or even 100x investment opportunity. So here it goes. If the live stream is going, if you can hear the audio, please give me a thumbs up, and I'll go ahead and try to answer some questions toward the end of probably about 10 minutes or so. Okay, so here's some opening thoughts here. So when you're going for, I think, a 10x or even greater generational company opportunity, I think the question is, how do you find that? How do you find that diamond in the rough? How do you find the needle in the haystack, right? And we're talking about not just a normal company, but a generational winner, like the decade winner that can 10x in market cap valuation within, let's say, 5 or 10 years. And the cool thing is, if you really nail a generational company early on, it's possible that this generational company can do a 10x and then could possibly do another 10x, which is 100. And in super rare cases, a company can actually even do another 10x, right? And that's 1,000x. I mean, if you're able to do 1,000x in a single company, that basically takes your $1,000 investment to $1 million. Like, think about that. Or takes your $100,000 investment to $100 million. And even if it takes 25, 30 years, that's mind-blowing. And there's nothing in the traditional investing world, I think, that can even compare to returns like that. All right, so what is kind of the essence of how do you find these crazy generational company opportunities? I think first, you've got to be looking for it. And I think the principle here is you end up finding what you're looking for. Meaning, if you're not looking for something that's like the diamond in the rough or the true generational winner, you're probably not going to find it because it takes a lot of intentional energy and focus to try to find something like that. And I think the traditional investing world, one of the big downsides of getting into investing by learning from just traditional methods and just the mainstream ideas is it educates you, and in a way, I want to say brainwash, but it teaches you what to look for. And I think this is the key point. You start to look for what you think you should expect, which is, for example, oh, I want to preserve my investments. I want a 5 to 10%, let's say, annual gain in the stock market or something. And I think it's super important how you get introduced to something, because that teaches you the foundations of how you do it. And then later on, if what you learn is wrong, you have to unlearn what you learned. And that could be actually a more difficult process, right? To unlearn all of the bad habits and wrong teachings. It's much easier if you just start out the right way. So what is this right way? In my opinion, I think, and this is my own personal approach that I'm refining and developing over time, but I personally think probably the most interesting and the most powerful way to invest is you have one basket, which is a safer basket for retirement. This basket is perhaps in a safer asset class. It could be diversified. And yeah, it's about preservation and slower growth, but it's more, maybe it's an income play. But this is a completely different mentality, this basket. And this is something that you can count on. And then the other basket, you take a second basket. And in the second basket, it's a riskier basket. It's not about preservation. So this first basket is about holding on to, that investment over time, which is a completely different mentality. Now, the second basket is about giving it away. It's about not holding on. It's not about preservation, and it's about growth, and it's about exponential growth. So this is the key. You want to ask yourself, what is possible from, let's say, a complete ideal situation from scratch, from blank? What is possible to do with a new basket of assets? What is the limit of investing? And in my opinion, and I think this is not what people and what the investment world and traditional investing is talking about at all, is the true power of investing is exponential growth. It's exponential reproduction. And the reason why I talk about this is is there some reason why if you go into traditional investing, literature, books, podcasts, all this stuff, everything is about percent annual growth. It's just, and that's the whole mentality. It's very, I think, kind of more short-term driven, picking up, a few percent here and there, where I think the true potential and power of investing lies not in, a few percent here and there every year, but it lies in the reproduction and the exponential nature of what's possible in investing. For example, let's say you have animals and, you're trying to grow your flock or something. Like what you're doing is you're trying to have them reproduce, right? That's the whole point of it, right? Your assets are reproducing. Or if you have a bunch of seeds and you're a farmer trying to plant a crop, you're planting the seeds and you're expecting a huge return off of those seeds, right? With your crop. And that's the point. In my opinion, I think when people go into investing, they aren't often expecting or looking for exponential growth, meaning they've been so trained and taught and totally bought into the traditional investment mentality of, 5%, 10%, if you're lucky, a little bit more, that the whole paradigm of reproduction, right? The whole paradigm of spreading seeds and seeing a crazy field grow or seeing exponential type of growth with investments, it's not taken seriously. And a lot of times it's actually despised and looked down upon. If you think about it, with the traditional investment mentality, you think that exponential growth is just too risky. In fact, you're not not looking for it, you're trying to avoid that, right? If someone's saying, this thing can 10x in 5 or 10 years, you're thinking way too risky, right? That's like the lottery. And the whole mentality on the traditional investing is you can't pick out the big winners, right? There's no way that you have any advantage over anyone else in the world to pick out, let's say, the big next decade winner or the big generational company. Therefore, you have to just diversify and so-called hold on to preservation, right? It's a preservation-focused approach to investing. Now, the thing that we need to do is, what I do is we need to question that. Is that really true? Is it really true that people can't really pick out the next generational company? Is it true that in the 2000s, you couldn't have picked up Amazon, or even the last decade or two with Apple? Is it really true that it's so hidden and so mysterious that that's impossible really to pick, right? The generational companies. Is it really too risky? Or even Tesla over the past 10 years. And I think what's interesting is people are starting to doubt the traditional investing model. They're thinking, wait a minute, maybe it's not true that it's impossible to pick, right? The generational winners. Maybe there is some risk, but maybe it's not like the lottery. Maybe there are ways to increase your odds to pick, let's say, a decade winner. Now, with traditional investing, you also have gatekeepers, right? And these gatekeepers tend to be institutions and funds and brokerages and wealth managers and all this stuff. And their business model is they want to manage your money for a management fee. And they will try to convince you that to hand over your money because they have special access and special information to investment opportunities, etc. And you can keep your money safer with them. And that's why they charge and they deserve their management fee. I think this whole model of the traditional investment world is being disrupted because we're getting a huge influx of information, right? The internet has unleashed hundreds and hundreds of thousands of times of information across, just anyone who has access to the internet. And this democratization of information is completely transforming the landscape of investing and is giving people ideas of, wait a minute, maybe I can actually jump in, and what do I need to gain? What do I need to develop in terms of skills and insight in order to find those really breakout true generational companies? All right, so in this video, I want to introduce one of the key things, which I think, sometimes you're thinking about your investment journey, and today is one of those days where I'm like, oh my gosh, this is bigger than I think, I realize at the moment. And one of the keys, and this is the key, I want to talk about it. I'll take some questions as well after this, but one of the keys when looking for a generational company is to look at the ambition of the CEO. Meaning, I want to look at the CEO and I want to see crazy ambition, not just mediocre ambition and not just above average ambition. What I'm trying to look for is I'm looking for completely just mind-boggling ambition from the CEO. And here's the reason why. Ambition is kind of like the fishbowl or the size of the fishbowl. And a lot of times the fishbowl will determine the size of the fish. So if you have mediocre ambition, you're probably going to get a mediocre sized fish. And if you have a little bit above ambition, you might get a little bit above mediocre fish. But if you actually get, let's say, a crazy ambitious CEO, let's say someone who just has mind-boggling ambition that's like 100x bigger than any other CEO, the size of this fishbowl is going to be huge, right? Think about it. Normal fishbowl is like this, right? Above average is like this. But let's say the 100x ambitious CEO has a fishbowl that's like crazy, is bigger than this room here. What's going to happen is the most likely scenario, if the company is able to execute and is able to really deliver their goals, is their fish, the company, is going to be absolutely humongous. And I think in some ways, this is one of the keys to identifying that 10x generational outsized company, the decade winner, right? The huge opportunity is to look for that type of ambition. I think a lot of times people think that, oh yeah, ambition can be learned, or lots of CEOs have ambitious plans. But in a lot of ways, I think the ambition of a lot of people and CEOs, it really is connected to their value system and to the way they view the world, the paradigm of how they see the world and how they see themselves. Now, this is kind of crazy, but it also goes into like how they see their self-identity and their role in this world, right? And what's important too. And so ambition, in a way, I don't think it can really be taught per se. It's a combination of so many different factors. And it's really a rare thing, I think, to find a CEO that is truly like 100x more ambitious, right, than anyone else out there. And this is an overlooked concept. This is an overlooked strategy with investing. Like, how many books out there, right, can you name where it teaches you to first identify the 100x super ambitious CEO, right, and their crazy plans as the starting point for investing in a crazy company? I've never read anything like this in terms of that type of approach. But to me, it makes sense. When you look at the first principle of investing, a company cannot usually outgrow or grow faster than their ambition. So in a lot of ways, the limiting factor for a lot of companies and their growth is the size of their ambition. And that ambition largely comes from the CEO. And that's why it's so crucial to understand and really get into the mind of the CEO. Now, this reminds me of an interview that I listened to a while back with Jeff Bezos. And this is back like in the 2000s. And Jeff Bezos was talking about this idea he had where he was saying sometimes in history, there are moments where, you have this like utility function where the electric grid is being deployed and there's electric companies, or you have, just water companies, just different things. And he was saying the internet provides an opportunity for that type of utility-like company to really be the infrastructure for the internet. And this was like in the 2000s, and he was saying he wants to build that, and that became what Amazon Web Services. And he stuck with it. But what struck me back then and even to now is the size of his ambition. He was looking to set up the infrastructure of the internet. And even back then, he was saying, I'm going to just, have small markups and really just, go for size, go for scale, and be that plumbing of the internet. And that's the type of ambition, the size of ambition. For example, Elon Musk with his whole, transitioning the world to sustainable energy, right? Trying to get a civilization on Mars. Like, this stuff is out of this world. It's truly mind-boggling. And that's the type of CEO we're talking about, right? CEOs that are just insane with the size of ambition. Now, here's the tricky part. Is a lot of times people can be impatient with investing and they can be short-sighted and they can say, fine, that's it. I'm going to invest in the most ambitious CEO. Forget it. Dave told me what to do. And this is not what I'm telling you to do, because investing isn't that easy. We need to have actually a multi kind of angled approach to this. For example, let's take the example of Theranos. So you have Theranos, who was kind of like this company that raised a ton of money. They had promise this amazing, right, blood testing, like miraculous technology, which they didn't have. They just kind of lied to their investors, and it was just kind of almost pretty much a fraud thing, right? They felt so compelled to have this ambitious plan, and the investors bought it up, right? They're like, oh my gosh, this is great, but they couldn't deliver the product and the execution to really meet that. So in other words, Theranos, right, was just a lot of talk without the walk. And so I think it's important, and this is the whole other side of things, is to do due diligence. And once you find that 100x super ambitious CEO, the next question is, okay, what is their strategy? How sound is their strategy? How clear is their thinking in their strategy, right? Does it even make sense, right? Is it a proven type of strategy? Next, what does their product look like, right? How superior is their product? And that's the thing with Theranos, like you've got to try it out. You can't just believe the CEO who says we've got an amazing product. And there's a lot of times with different companies who might tout their products or things in their lab and say, oh, in a few years we're going to revolutionize virtual reality or whatever, we're going to revolutionize biotech or something, but they don't have a real product, right? You can't even test out their product. So, one of the things I appreciate about Tesla is that Elon said, okay, judge us by our product. And he released the Roadster, product focused. Elon could have said, we're going to R&D, right? Research and development in a lab for 10 years and develop this amazing electric vehicle and then release it after 10 years, right? But Elon, he knew that, hey, it's all about the product, and they need to get in front of people as soon as possible with the product so they can learn to make better products. If you're in the lab without a product, you're at a huge disadvantage because you're not getting feedback. You don't know how to improve your product. So I really question a lot of companies who are just in the lab for so many years. They're at a huge disadvantage in terms of really innovating and improving their product. What I'm looking for product is I'm looking for true product superiority. I'm looking for products that are just amazing, far greater and far superior than any other products, and the ability to defend that product superiority over time. And that leads to also execution. So the next thing is a CEO can have ambitious plans and all this stuff, but they need to be able to execute. They need to be able to actually follow through and really know what to do, how to execute that huge grand, right, vision. For example, you can have a company like GoPro and they say, oh, we're going to revolutionize, media creation, and we're going to revolutionize broadcasting. They can have grand plans, but do they have the execution, right? Do they really have the chops to go head on with the best of the best, right? With the Amazons, with the Googles, with the Apples of the world. And do they have the execution and the level of execution to beat the best of the best out? That's a huge question. A lot of companies, they fail with this. They just can't execute with the best of the best. This is one of the reasons why, when I'm looking to a new field, I'm trying to try out the product. I'm trying to look at the competition, look at the landscape, right? Not just believe in the super crazy ambitious CEO, which is kind of like the starting point in a sense, but I'm trying to poke holes and see, hey, does this guy and does this company really have what it takes? And sometimes, most of the time, it doesn't work out. Most of the time, the CEO, in my opinion, doesn't have as ambitious plans as I think they need to, really to have the fishbowl isn't big enough, right? The company just doesn't feel like it's going to become big enough because the ambition is too average. And then there are times where I find a CEO and then it's like super ambitious, but then their execution is lacking. They just don't have the product, right? It just, they aren't proving, they're not walking the walk. And this can actually be a quite a discouraging process at times because you're searching, you're just wanting to give up and just like, fine, forget it, I'll just invest in whatever, But I think there's something where it goes back to the beginning of this talk, which is you're not going to find what you're not looking for. Meaning, if you're looking for that generational 10x, decade winner, then there's a process to go about it, which is, you've got to have that CEO with crazy ambition. And then you've got to do your due diligence on the CEO, the strategy, the product, the execution, and the competition and all that. But then once in a while, you might have all the pieces come together and that forms conviction, right? That forms this idea where you're not 100% confident, because in a way it's hard to be 100% confident about almost anything in the future, right? We're talking about, things, there are so many unknowns. But what I'm talking about is all of the due diligence can lead to a place where you have conviction, where you think the most likely scenario and probability is they really are going to do a massive, right, jump in market cap over a many-year period, and they are going to be like a huge winner in this, let's say, highly lucrative and growing market that they're accessing and penetrating. I've shared some of this stuff. Today I was on Couch Investor's channel, and he did an interview, and I shared some of these ideas. And so I kind of wanted to expand on in this talk. If you're interested in some of these ideas, you can go to his channel. I'll try to link to the interview later, where I kind of expand on some other questions. All right, so what I want to do here is I want to take some questions from you guys. And if you can go ahead and before typing the question, put in all caps question : and then go ahead and ask the question. I haven't been able to follow the live stream up until this point really that much because I'm thinking about stuff, talking. So I'll go ahead and look at the questions right now. I'll go ahead and probably take a good maybe 5 to 10 questions. Hopefully we'll see, and then we'll wrap it up. All right. Michael Chase says, was there any realization or thought that occurred to you that enabled you to have a detachment to money? Yeah, I mean, a couple things come to mind. One is, I think coming to the place where I saw so much hurt and poverty and lack, it got me to compare myself, where I was living in inner city LA, paying $350 for a room in a shared house for, I lived like, that was the height of my kind of, up until, I was early 30s, like I lived in worse conditions before that, right? In college and grad school. So that was like, I was like, oh yeah, this is great. I have, a room, and yeah, no heating and no air conditioning, and it was and a shared bathroom and all this stuff. But I compared myself with people who really had nothing, and I saw that firsthand. And there was such a gratitude where it really helped me to say, hey man, like I can get by with a lot less than most people. And I think that helped me to kind of be more confident. The second thing was, when I'm looking at investments, I kind of really understand, and I really see the essence of the power of investing. And in that sense, even if I feel like I make mistakes, I feel like I can recover those mistakes. I feel like it's not life-ending, it's not traumatic. Third thing, I feel like having an extra kind of safer basket of assets kind of helps kind of be more free, kind of with money. A fourth thing also is my concept of investing really is kind of this giving away. It's not really a holding it with the string, and like most of the traditional preservation investing. My whole thing with investing is you need to give it away. You need to let someone, the CEO, the founder, give it to them. They take it and really run with it, and then give back value. And so kind of understanding a lot of these things helps me in investing not to be so attached or so scared in terms of the outcomes, but also kind of understanding the dynamics of how I can have a competitive edge against other investors or the investment world, and see kind of understanding the weaknesses of the traditional investment world. Like they're just not interested in the 10x, 100x gains, right? They just don't want it. And to understand that, to realize that, they're like, oh, they're out of it. They're not even in the competition, right? It's like in the early days of Tesla, no, the traditional investment world doesn't even want to be there, right? And at first it was incredible to think of. It was just like, why aren't more people, right, like in this field? But now it makes complete sense, right? The values and the whole approach, the paradigm is completely antithetical to, I think, the true nature of exponential growth and investing. So all of these things kind of play a part in kind of my view. All right, Invest in Your Future says, awesome sharing. In your opinion, what are the companies we can invest in for capital preservation and high growth? So if you're talking about capital preservation and high growth in one kind of company, I personally think that's the whole kind of traditional investment approach that is boxing people in, right? The extent of high growth that people can look for is they want the highest growth they can with capital preservation. But that's the problem with capital preservation. You get risk, you get unknowns, and that will increase, or actually with growth, you get more unknowns, which reduces, right, the ability to preserve that capital, at least the confidence. And so in my opinion, you just need to divide it in half. You just say, hey, capital preservation, kind of slower growth, make a safer basket of assets. Real estate is fantastic in some ways. Maybe there's some other stuff, whether it's companies or even in some ways, diversified holdings like an ETF in some ways, or a total stock fund, S&P 500. There's different types of things you can do. And the traditional investment world actually is fine with that. Like, you can get a financial advisor, you can figure out what is a safer basket of assets. But then for this other basket of really shooting for the moon, going for the decade winners, like, I don't think you should mix it. I think you should really go for it. You should really try to depack it from first principle, saying, okay, let's start from scratch. How do we really find the generational winners, right? And build a completely new framework from that. Srinvalusu says, hey, how do you identify a 10x sector in the next 10 years? Yeah, I think there's a lot of ways to try to look at this. Some of it is like technology is changing. So here's the thing, the closer you are to understanding technologies and understanding the flow and development of technologies, the more you're going to be kind of in tune with the changing world. And so that's kind of one of the reasons why I like to be in touch with technology and the people who are pushing the envelope with technologies, is because this is defining the new trends. Because once you have new technologies, it enables new things, but then the old incumbents aren't familiar with the new things that new technologies can provide. Therefore, there's kind of that opportunity. It provides this gap where the new companies and new entrants can have a shot at disrupting and gaining market share. So in a way, this is the story of 10x, 100x generation company investing. There always has to be that opportunity created, and usually that's created by new technologies, right? Faster computers, faster something, new platforms, right? New types of technology like neural nets or artificial intelligence. And this is why, for example, with artificial intelligence, I really think people need to understand the basics of what it is. Like, how does it work? What are neural nets? How does it get smarter? And and how are companies using this? So you need to ask, if a company is saying they use AI, like, how are you using AI exactly? You don't have to know the code level, but you need to understand, how are they using, right, those technologies? And yeah, I think one of the great interesting areas is genomics and CRISPR and things like that. And that's the thing, you need to dive in. Personally, that's my opinion. And it doesn't have to be a deep dive initially. It could just be, look up CRISPR, watch a few YouTube videos on what it is, and just, start from there, right? Just get kind of, sometimes the best understanding is the most bigger picture understanding. It's not necessarily diving down into the specifics. And I think a lot of times you can find the great resources, then you can do that actually quicker than a lot of people think. All right. Question. What CEO has the greatest ambition outside of Elon Musk and Bezos, in your opinion? Yeah, I think there are different, people that I'm looking at. And the cool thing is, founders with great ambition, this isn't a limited group, meaning it's not like a closed club. It could be this 18-year-old or 15-year-old or 12-year-old kid who has the greatest ambition right now, but we just haven't discovered, right, that right at this point. And so it's always a fluid process of discovering this stuff. I was sharing earlier in today with Couch Investor that Stripe has some of the most ambitious CEOs, and that's how I'm looking at the fintech space. That's Stripe founders, their ambition is just so crazy huge. And when I compare it with some of the other companies in the fintech space, the other companies' ambitions seem kind of mediocre or above average. And that's kind of one of the ways I evaluate things. I think in some ways, I'm not particularly like the biggest, fan of gaming per se. I think there are lots of pros and cons, but I think there are certain companies in gaming and metaverses that have huge ambitions because the technology is allowing that to happen, meaning the technology is improving at such a pace where it's becoming inevitable, where they see that people can live entire almost existences in a metaverse, right? That's not a physical, but it's in a digital reality. And that type of stuff is pretty ambitious. I mean, it's kind of out of this world. Yeah, I mean, you go into the field, in my opinion, there are fields that you might be interested in, genomics or whatever. It could be space. Like, for example, look at space. Like, who's more ambitious than SpaceX and Elon Musk in space, right? That's the fishbowl. That's the size of the fishbowl. And that's why SpaceX is going to become, what they become in the future. It's because the size of the interview. All right. Raj Beer says, if there aren't many CEO interviews out there, how do you get a good feel for the CEO and their character? Yeah, that's a real tough one. Like, I am treasuring the CEO interviews that I see on YouTube or Google is your friend too. Like, search for audio interviews, search for podcasts. So that's the thing. Go through YouTube, go through Google, do text interviews. That's fine. Go through podcasts, search in podcasts, start doing like quote unquote random searches for the founder and just do a deep dive on that person. Really try to find, the essence of who they are. One of the benefits of having a YouTube channel is I'm finding that it's a little bit easier to get some CEO interviews, especially for smaller cap companies. And I think that's one of the things that I appreciate and I want to share together. It's kind of a crowdsourced venture here. As I get subscribers, that helps me access certain CEOs and I bring them on the channel that helps kind of expose their thinking. And when I bring on a CEO, I'm not endorsing the CEO per se. What I'm doing is I'm allowing the CEO to kind of get grilled and to engage with me, but letting you and myself also decide and evaluate the pros and cons of their strategy, their product, their thinking, their execution, etc. So it's not a blanket, endorsement by any means. Come for your soup says, do you look at stocks outside of the US? Last year I was looking to China, picked up some companies. I'm always open to different countries. There are some extra challenges with language, with culture, with different risk factors. For example, Chinese companies, they have a different kind of regulatory regime there where it's not as strict with accounting. And that's why you have a higher chance of fraud in China. And so you got to look at those things, each individual country. I think there is kind of this 10-year kind of risk factor, thinking 10 years out. If the US increases certain taxes, whether it be wealth taxes or mark-to-market or income tax or different taxes, I think there's a growing possibility that we might see founders choosing to find some revolutionary generational companies outside the US over the next 10 years. And so this might require some type of adjustment in strategy. Up until this point, the US has been like the de facto, perhaps probably the greatest place to start a company because you can amass the talent quickly. You've got the funding infrastructure with the VCs and all this stuff. You have access to a big market in the US, and then you can expand outward. And so that's something yet to be seen. All right. Matt Loberstein says, hey, I love your deep thinking and conviction. Did it waver when Tesla was flat for so many years? Did you question your conviction? I think when it wavered for several years, I think there are times where, it's like no one wants to see their portfolio just like stay stagnant for 4 or 5 years. So it's definitely not a fun place to be. But a couple of things helped is one, when Tesla went from, let's say, pre-split 30 to 300 pre-split. So that's what, 6 to 50 or $6 to $60. And when it did that, I always had this mentality that, I don't want to base my portfolio off of kind of these high or the highest prices. I kind of cut the stock price in half or 75% to base my portfolio. So I always had kind of like this more laid back conservative approach of how much my portfolio is worth. Therefore, when it dropped a lot, I'm not too concerned, right? It's kind of a psychological game. Strategy I'm using. The other thing it helps with Tesla, for example, was the Model 3 was the make it break it moment. And that's why I was dying to get the Model 3 as soon as possible. So I have a very, very early, 2007, end of 2017, December 2017 build of the Model 3. And that was kind of like, I need that. That's essential to everything. Because if I told my wife, like, hey, if this Model 3 surpasses my expectations, then yeah, we're going to keep everything we have and, go for it. If it is lower than my expectations, we're going to start, pulling stuff out because this is just not the company I want to be part of. And so the level of product excellence, like how far superior was the Model 3 compared to other cars, and how do you evaluate that? That was like one of the most crucial things to base conviction on. And also it's like the ability for Elon Musk and Tesla to overcome their production ramp issues. Exactly what are those issues? Are they overcomable? What is the risk? And I personally thought that, they could overcome it. It was mostly, financial, they could raise some money and they could get over the hump, over time. But there are definitely risks, right? I mean, to say that I wasn't stressed at times, it wouldn't be truthful. There were definitely times, especially with days of massive drops where you think that maybe it can go lower and lower. All right, Sumit Gupta says, did you change your opinion on Bitcoin? My opinion on Bitcoin has changed over time. And I actually attribute it mostly to my subscribers and followers, right, on YouTube and Twitter. I think you guys have helped me out tremendously. I've interviewed several, fantastic Bitcoin, advocates, and they've really helped me to kind of sort through things. There are two issues at hand here. One is kind of this long-term picture of how Bitcoin fits into this whole first kind of this government kind of tension, right? And government regulation, that tension, but also how Bitcoin fits into a greater world of, let's say, the digitalization or the ability for all assets to be liquid and digital over time. But then there's a short-term aspect, which is the demand for Bitcoin, which largely determines its price. And so for most of all my videos with Bitcoin, I'm saying, hey, short term, I'm not a bear by any means because I see the demand, right? And it's very obvious. So if anything, I'm like a short term bull in some ways because I see the demand. It's the long term things that I have had some doubts about. And I started to, pick up some Bitcoin position, not a ton, but, a small position, about a month ago, and looked at it more as a trading position, and see if I could learn more. And I think seeing over time, especially this past month, and seeing GameStop and a bunch of other stuff happening, I'm starting to see, there's a lot about the future we don't know, and a lot of times like mass adoption can actually change how the future looks. And so in some ways, if enough people believe in something, it's possible that it increases the odds of that happening. I think Emmett Peppers tweeted out something I was reading. He was saying something like Venture 2.0. Venture 2.0 is when masses, pour their money into a stock or company, it shoots up the price, and then this company is able to raise money at a high price that radically increases the ability of that company to possibly succeed. Whereas before, they were having a hard time to succeed because they had not much access to capital, not much belief by the general markets. But we live in a strange world where, if you have, hundreds and hundreds of billions of dollars pouring into an asset, that's increases its probability of success. And with Elon Musk kind of vocalizing his support of Bitcoin, that's another factor that improves kind of Bitcoin's trajectory or its future possibilities. I think it's risky for Elon to really lay his reputation at stake on Bitcoin long term because it's one of those things where, it's unclear exactly, the extent of what Bitcoin is going to be in 5 or 10 years, right? It's up for debate. And I love the issue of Bitcoin because it influences and it's connected to so many things. Next week, I'm going to be interviewing Robert Breedlove, Bitcoin advocate. And then this week, I think tomorrow, I'm going to be interviewing Robert Leshner. He is the CEO founder of Compound. So they've developed a kind of a decentralized finance kind of company that allows people to earn interest off of cryptocurrencies. So I'm starting my deep dive on decentralized finance, DeFi, and I'm going to be inviting some CEOs and founders who really can help me, but also help others understand DeFi from a first principle kind of foundational level. And we can start to, this is my goal, is start to identify what's happening. Like, where is this headed? Who's in the best places to be the big winners? And also, what are the possible opportunities? And so it's awesome. If you're listening to this, it's actually a cool opportunity because you can get in like early on by listening to, let's say, this next interview tomorrow with Robert Leshner, and then you can start to build your understanding of DeFi. And then maybe you already know all this stuff, but maybe it'll help a little bit, but you can branch off and really kind of understand some of these new areas. All right, Calm Down says, I was living in LA paying $350 for a share in an apartment. Investor mindset. Yeah, completely the opposite, man. I wasn't trying to save money to invest. It was the only thing I could afford, and I couldn't save. I just really didn't save money. For 10 years, I barely couldn't save. I didn't save almost like barely anything. That was, yeah, there's a certain level of when you hit so low of an income, like it just, I can understand the difficulty of saving. Yeah, it could be definitely a challenge. All right, Daniel Winnick says, what triggers you to have more or less conviction in a company you are starting a position in? So yeah, I shared this whole video is about ambition, right? And then due diligence on strategy, product execution, trying to work backwards from that to determine, the eventual possible size of this company. Founder conviction is a big thing. Like, I want to see the CEO and founders like really into it. I mean, Elon putting all of like his stake in Tesla and just, I'm going down with the ship if the ship sinks. That's what you want, right? You want that combined with the crazy ambition. And the reason is if you have someone who has their, let's say majority stake of their wealth in a company and it can go down, they're not like, saving some stuff on the side in case the ship goes down. If you have that type of founder, they're going to come up with some really crazy, like creative stuff. Like, they're going to be sleeping on like problems and trying to find solutions to problems much more than the CEO who's like taking out all this money to buy a yacht and buy a mansion and buy all this other stuff and invest in other companies, right? And so, I'm looking for CEOs that are all in, who really believe in the mission. They're very convicted, but also product, right? Going to the competition, going to the ground, seeing the product owners, like, do they really believe in this stuff? There's a question about SoFi. What do I think about SoFi? Like, here's Lily 94111. I think it has potential. The only reservation I have is compared to the crazy ambition of Stripe and their founders, I find SoFi like kind of not in the same category as a Stripe. And maybe I will change my mind. I know I've listened to some of the CEO interviews. I understand the whole vertical integration, wanting to provide all these services for their customers. But to me, that type of ambition makes sense. There's a type of ambition that just doesn't make sense. It's just way out there. It's just crazy, right? And that's the level of ambition I'm looking for that I think like Stripe has, but I'm not sure if SoFi or even Square has. And also with SoFi, I want to know more about it, like trying out their product. Exactly, is there something that's the thing. I'm going to their website. I'm like, what is it that's really going to draw me into it? Like, is it a no-brainer for me to sign up? And what am I going to do with SoFi? Like, it's unclear right now. If you guys, and that's the thing, my investment decisions, they can be a big mistake because maybe it's a huge winner. So maybe you might have the edge because you understand SoFi better, right? And you can really drill down and you understand its value proposition. Sonia Smith says, thoughts on ARK-X and the possibility for retail investors to invest in SpaceX through this ETF. So okay. ARK is amazing in the research they do, and they're one of the few places that really try to look at innovation, right, from more of a first principle kind of manner. That's the pro. The con or the challenge that ARK has is they have kind of this, they're playing the middle game. They're trying to be diversified and play the traditional investing thing of, spreading out their bets, right, for kind of sound portfolio management, right? That's the thing. They don't want to be seen as this crazy, just, dumping all their money in one thing. And sometimes I wonder if like if you just invested in the number one conviction or pick the top 3 stocks that, ARK is convicted in and just stick all your money in there, I wonder what the outcome would be versus investing in their funds, right? Because their funds, you're holding a lot of different companies. And sometimes I wonder like how deep is their conviction on, company number 10 to 30 or something, versus their conviction on company number 1. And so with SpaceX or with ARKX kind of fund, my question is, I don't know this, and maybe you guys can help me out. It's like what % of the fund will really be invested into SpaceX? If it's like 50% or more, then hey man, that's actually pretty impressive. But if they really have to limit their holdings to 10%, like think about it, space, and you're gonna limit your ETF to 10% of SpaceX, but your space, like to me, that wouldn't make sense. And I hope ARK, if they're listening, that you would make an exception for space, for ARKX, which is, hey, this is obvious here, right? The big winner in space is SpaceX. It's their game to lose, right? Maybe some other company will come up and, be the big winner, but it's about ambition too, and execution. Probably everything I'm talking about in this whole episode, right, is exemplified in SpaceX. And so, do I want to invest in ARKX if it's only 10% SpaceX, but I have to invest in all these other companies I don't really believe in with space? Yeah, that's a tough sell. So, anyways, I hope they do at least 30%, if not 50%, allocation in SpaceX. I think that would be awesome and amazing for people. Master Photon says, is it possible that Tesla shareholders will have first priority to Starlink IPO? How would that work? Yeah, I'm thinking maybe 2 years, if not 3 years, Starlink could IPO, and Elon would give maybe first access, but it wouldn't be. I want to kind of put people's expectations at play or downplay a bit their expectations. Airbnb did something similar, but you were only allowed, I think it was around $10,000 or so of Airbnb stock that they allowed their Airbnb host to have. I think something similar. It would be probably a small amount that Tesla shareholders can have. I wish it could be bigger. I wish I could be invested into Starlink right now. Question, given it's a bull market, do we have a higher risk of running into false 10x companies? Yeah, this is a tricky one, because on one side, there's this enthusiasm, and with the Fed printing money, with stimulus, with how the market's been running, then you have this whole thing of just exuberance, and then people are throwing out traditional valuation metrics, and you have companies here left and right being valued $30-40 billion, and do they really have that type of justification to be valued at that market cap? And it comes down to fundamentally market cap, like what is the company valued? And I think sometimes I feel like we're losing sight of that. We're thinking that, oh, it doesn't matter market cap, right? It could go to the moon and it's justified somehow. But the market moves in cycles, and during some severe corrections or downturns, we're going to see that come back, right? People are going to be talking about valuation and market cap, and a lot of companies that are kind of pie high in the sky, they're going to be way down. But it also, on the flip side, it provides an opportunity if you're tracking kind of a sense of who you think is going to be the big winners, right? Decade long, you could take advantage of market corrections to build up positions while others are kind of freaking out. All right, question says from Marcos, what do you think is the most unlikely thing that can happen to the stock market after this GME thing that you might be afraid of? Personally, I'm not completely afraid of the markets because generally speaking, I've got kind of more of a long-term kind of perspective. I'm okay if my holdings drop 50-60%. It's not the end of the world. I think ultimately, like, I'm pinning my kind of, investments on company execution, right, on their products and their services over time. And so I feel pretty strong about that regardless of the market. The markets will go up and down in different ways. So if I kind of push that aside and I put on just kind of a short-term kind of hat to think about GME and the markets, let's say for next month or next few months or this year, I think in some ways it's going to be interesting to see how this plays out, and if it increases volatility somehow, where it could lead hedge funds to pull out shorts from other stocks, and we're starting to see some of that, it looks like. But if shorts pull out, it could fuel bigger longs or longer longs, perhaps, along with the stimulus, perhaps more Fed printing, etc. But then, on the flip side, yeah, it could go the other way because, for example, you have COVID, that is, the pandemic could be seen as something that is near term kind of a solvable problem. The market starts to do the unexpected thing, which is it falls back because, this play of trying to, invest in the stock market during COVID could be over. So there's a lot of things. Sometimes the market does unexpected things. Sometimes it does the things that are opposite of what you think because it has a way to wipe out the weak hands, and it has a way to sometimes, to really go with, a way where I guess smart investors can take advantage of. All right. Do you think Lucid Motors has potential to 10x? I think I'm not a big fan of second place, third place kind of companies. Like Lucid is, but here's the thing. I think it possibly can do very well because they've got a market, right? They've got all the legacy OEMs that kind of might need Lucid's technology and might want to merge with them or buy them out. It's going to be a desperate world out there with electric vehicles. Today, we have the announcement that Ford and Google decided to enter a partnership where Google is going to provide data connection, Android for the car, but also they claimed AI, which I think Google is going to try to provide autonomous driving solutions for Ford. And you might laugh at that and people might not understand that, but if Google is going to provide, let's say, free autonomous driving software via a Google Android kind of operating system inside the car, this is actually quite interesting. It's something that I think Tesla folks and fans would discount, but yeah, you don't discount Google, who's one of the best executors out there. Omar says, Dave, would you consider making a hedge fund for SpaceX? I would follow you because I believe in you. Yeah, I've looked into kind of trying to see what I could help out with in terms of trying to open up an opportunity. It's really challenging because right now SpaceX is not allowing new investors, new funds to get in. It's really exclusive. But yeah, there are also some other people trying to get in and help people invest. A lot of it is you have to be an accredited investor. But even that, it's like the opportunities are so few and far right now. But I think, if I could help somehow to open up SpaceX to more people, that would be fantastic. MMK says, hey, how do you identify good execution of the company in its early stage? So, first things first, I think ambition actually might even be, as important, if not more important. So I want to see ambition, but execution largely will show in its product. And rather than talk, like everyone can talk a good talk. Like for example, interview real estate agents, right? These guys are the greatest salespeople ever, right? They will convince you on anything or try to hire you as their agent. It's amazing. People are great at sales, at telling you what you want to hear, right? So you don't want to depend on talk. You want to depend on product. You want to see the product in real life, in real world action. You want to see people paying for the product, and you want to see that product compared to other products. That's how you're going to see execution. And you're going to see execution on how fast the company is improving that product, right? That's execution, right? And so forget the talk, right? That stuff will confuse you and will lead you astray, in my opinion. All right, Daniel Ginja says, what percent of your wealth do you keep in cash? I'm keeping a small percent in cash. It's kind of weird because of Tesla's appreciation or just rise. I mean, my initial investment is like up 100x, which was our life savings. So even if I take out just 1 or 2%, it's actually quite even 1% is my entire, like more than my entire original investment, which I thought was quite a lot of money. So if I hold just 1% cash, it's like, what do I do with this cash? It's kind of crazy. So I try not to hold too much cash, but the reason why I want to hold a little bit of cash at least, I wish I could have more cash, but my challenge is I don't want to liquidate too much Tesla. I pay taxes and I still believe in it. But I want to have some more cash for some more opportunities. So I think if I had some more cash, I could be more aggressive in getting into SpaceX, into Stripe, and a few other opportunities. And so that's kind of my thinking. I'm not a big fan of putting a ton of cash because I feel like we're in an environment where there is a possible inflationary kind of situation where it's not just with consumer goods inflation, but you have, with the Fed printing so much money, you have kind of this asset inflation, I'd call it, where assets are kind of the safe haven. And so you have real estate, like so many real estate markets that I'm tracking are doing so amazingly well. COVID, it kind of paused the real estate market for a few months, but then after it just, people started buying and markets are extremely strong. So I'd rather be in real estate or stocks or companies that I love and cash to be able to deploy when I need to. I do kind of envy Emmett's position where he put 10 million aside into a kind of safe kind of fund that would do better in a recession or in a market correction than a typical, let's say S&P 500, then he could deploy it, right? At a certain time. But for me, I have tax consequences, so it's a little bit harder to do that. All right, Alex Georgia says, hey, how do you avoid having FOMO, fear of missing out? I feel like this can often blur the search for other opportunities because you focus too much on the asset causing FOMO. Yeah, like this is something that I actually struggle with because a lot of times I have this thing where I just don't feel like I have to pursue every opportunity. Yet I want to have the balance where I'm not lazy, but I'm engaged. So I want to at least, make the dive into the companies I need to do to get that sense of the company. But I don't want to feel like, I'm not sure of this opportunity yet. I'm going to do it because everyone else is doing it, or I don't want to miss an opportunity. I just feel like I don't know how replicable that is, how scalable that model is. It's kind of like this throwing darts, just you have 100 rocks, throw them. Like, to me, it's like, yeah, I want something that I have more confidence in, that I could really go, boom, here it is, and kind of this throwing it away attitude where I'm like, I trust the CEO, the product, the execution, this company, the strategy, the markets, etc., enough where I'm willing to throw away this amount to this company and I don't need it, right? And I will look at it. I hope that this does a 10x at least in 5 or 10 years. And I will monitor that company, make sure they're doing well. But as long as they're doing well, like, I'm fine just leaving it, like trusting like the people I've delegated, right, my investing work for. So in other words, the CEOs are my investment managers, right? They're the ones who are taking my money and doing things with. I'm not a person trying to take it back unless they're messing up, right? And then I'll be like, hey man, you guys are fired, right? I've got to look for some better investment managers. Sumit Gupta says, besides Kathy Wood, who would you invest in for an exponential growth fund? See, this is the challenge. When you're looking into funds, they are usually in the traditional investment world where there is kind of a looking down on exponential kind of high growth, really, crazy winners, because they really think it's terrible. They really think it's a lottery. You can't choose them, right? There's no edge you have, etc. And so that's why in the bigger picture, I don't think you have really. I mean, exponential growth funds, like, is that I don't even know if that's possible to exist in the traditional investment world. I kind of think it by nature, it needs to be out of the investment world, meaning it's not necessarily a fund, like a traditional investment fund. And that's where the retail or the individual investor might actually have an advantage, where they can think outside of the box and say, hey, what are some opportunities that, are out of the box? And that's an awesome thing about investing in stocks is, hey, anyone can buy any company in the world. It's just, that just thinking about that, anyone, not any company in the world, but almost like the public companies out there, it's amazing the opportunity that you have. Ting Ting says, I have a safe basket of investment and insurance, but my yearly repayment and kids' education funds is stressing me out from investing too much on this growth stock. How do I get over it? So yeah, this is, okay. So I think, I don't know your financial situation. I don't give advice, but I share just random thoughts, right? And my thinking is this situation could be how I interpret it as an income issue where you have some set aside for, let's say, investment and insurance, and I guess repayment for kids' education funds. So I'm going to interpret this kind of thing as maybe you have a safe basket and you have more of an investment basket, and you don't have enough income to really invest a lot into your growth, your exponential growth basket. And in that case, what I would do and what I've done in the past is I make it a problem. I say, dude, this is a big problem I have. I've got an income problem. And, I've got a lot of ideas. I've got a lot of hunger and a lot of desire to invest into exponential growth opportunities. But like, I need to contribute some to this safe basket because it's a wise thing to do. And I can't take risks with that. And I have a lot of bills to pay. I might have student debt. I might have rent payments and all this stuff. And I don't have much left over. I can barely, put in a few thousand a year into, let's say, exponential growth fund. In that case, this is not going to be traditional advice. But I don't do things traditionally, but go to bed every night. This is what I would do. I would make it a problem. I say, hey, I tell my wife, hey, we got a problem. We have an income problem here, and at nighttime, I would think about it right before I go to sleep. I have an income problem, and what can I do to fix this income problem? And I would think outside the box, and I would start to talk with people, make it an issue. What is my problem? My wife and I would be on board. This is our top financial problem right now. We need to grow our income. And out of that, I'm confident that, ideas come out. And this has happened so many times where, I set my mind to a problem and not try to short circuit that problem, not to give excuses. So here's the thing. A lot of people, they short circuit the problem solving method or approach because they start to give excuses really fast, or they become cynical really fast. They start to blame the economy. They start to get all political and say, oh, this is wrong. This is wrong. They start to, make all these excuses of how their system is rigged. And that's why I understand that. And those are important things to fix, but you can't let them become excuses to let you dig a hole in the ground that you can't get out, and you can't solve problems anymore. One of the greatest powers that you have is the problem to solve problems, right? Or the creativity to solve problems, the ability to solve problems, right? This is what separates like humans from animals, is humans have the ability to problem solve on an immensely humongous level that, it's not found elsewhere. And this is what you need to tap into, right? And this is, where you need to go. And it can be ideas on improve your current salary. It could be side jobs. It could be different, entirely new industries. It might mean moving, out of the area into a completely different region or city or country. Who knows? There are a lot of things, but if your mind is set to it, that's a problem, and you're open-minded, you don't have excuses about it, you're taking ownership of it, you'd be surprised at the power that releases, right, for creative solutions. So if it's income problem, definitely that's what I would consider thinking. Now, a lot of the things I'm saying, I could go on for hours or just, so many different angles. I'm just giving kind of a tidbit. So this isn't a defining kind of, this is what you should do. This is just one kind of tidbit of a, answer that you could think about. Cheering Sherpa says, hey, what are your other accomplishments other than Tesla in terms of investing? So I hate to kind of, on one side, I understand people need to understand background. And another side, I'm careful to kind of pump my gains and my investments because I don't want people to be blind followers saying, hey, I'll just do whatever this guy does or tells me to do. That's kind of antithetical to the whole essence of my channel. But yeah, in terms of my own personal investment journey, what I could say is with investments, our first big kind of, move was the App Store. And so this is where we did, we took $500, created a app for the App Store and built it into a software company. And, that was kind of the big kind of riding Apple. So Apple was kind of like our big first thing. We took funds out of that and we started to go into real estate, picked up some properties, managed some properties, renovated all the stuff. And we hold some of those properties still, but we sold some. And then we went into Tesla. And Tesla actually has many stages actually over time. It's it's not just like, it's not easy to stick like your entire life savings into a company and see it go up 100x, but to hold. Like people underestimate the many lives it takes to do that. Because for example, when Tesla went from, $30 pre-split to 300, 95% of my friends and people I knew that had invested into Tesla, they basically sold most of their holdings over a period of a few years. It's really hard to stick with it. One of the things that helped me was just writing. And so that's one of the reasons I linked to kind of my articles on Tesla Motors Club. So from 2012 to 2017, 18 or so, actually, yeah, 18 or 19 even, I wrote just thousands of posts on my angle of how I saw Tesla, but not just Tesla, how I saw investing, because I wanted to help people think through things, but I also wanted to share, like, I really think this is a reproducible thing. Like people didn't think you could really reproduce picking generational companies, at least, when I started writing and all this, it was really kind of a rare thing. And I felt there were certain things you could pick up that could really, do that. And so, and then it's, and I've done other investments too that I don't really talk about, but I've done some seed investing. Some has not done that well. Some did decently, but they're not big amounts. And then I do have a portfolio of more diversified stocks over the past 1 year that has done actually quite well. Let's go on. Question: if you were a millennial investor with a long-term horizon and had 100,000 cash to invest, what would you do? So here's the thing. You have a combination of risk. You have to think about risk. A lot of times people underestimate risk. So if you have 100,000 and you're, let's say a millennial, let's say in your 20s, you can have a higher risk tolerance, a higher risk profile because you're younger. But you don't want to overextend that risk profile where you're just throwing things at things that you don't know what's going to happen tomorrow, right? That is a quick way to lose that 100,000 very, very fast. And in some ways, like you have to think of the other side too. Like, what if you took that 100,000 and if you could just double it, consistently, let's say once every 5 years, right? That's actually quite amazing. That's about like a 15%. Year-over-year gain. If you could double every 5 years and you do that over 30 or 40 years, like you're just, that's an amazing, right, investment approach as well. And so the trick is you need to find high conviction, plays that you think have lower risk than what is perceived. So people think it's high risk, but you have certain knowledge and information, and it's not through FOMO, and it's not through emotions, and it's not through just narrow-minded thinking, but it's through due diligence and really wide, comprehensive research that you find out stuff that other people don't have or don't see or understand, and you're able to have some type of advantage. And so that's kind of the thing. It doesn't really matter exactly. You need, though, a unique angle. You need an advantage to really lower your risk, right? So you can up your probability of success with investing. And that's why some people will pitch a get rich easy, just pick these stocks or throw it into here. But I'm telling you, man, like over time, it's investing is something that it punishes the lazy. It punishes, the people who want to take shortcuts all the time. And there's something is the strategy of how you go about it needs to be so solid that it could really stand the test of time. So yeah, read a bunch of books, not necessarily that to guide you, but maybe they'll teach you how not to invest, and really think through, I think, getting your own strategy and your own competitive advantage. Also, I think starting your own business and side hustle is underrated. Yeah, take $5,000 and start something on the side. Make some extra money, maybe make it into business, grow that business over time. You'll learn a lot actually about running a business and actually how to invest by doing by starting your own business as well. Okay, question. What would it take for you to invest in Beyond Meat? Personally, I'm not a huge vegan fan or vegetarian fan. I used to be, actually. I used to be a vegan and vegetarian for a period of about 3 years. This is probably like 7 years ago or so. And it was purely for health benefits. I really wanted to experiment to see if I could become healthier through a vegan or vegetarian diet. There were times where I felt healthier, but then there were times where I didn't. And after 3 years, I kind of came to this conclusion that, I don't think it helped me overall. I think it kind of, and this is a personal take, but it led me to kind of consume more carbs than I should have. And so I kind of reverted, and I tried to look for some different ways to improve my health. And I'm kind of more of a fan of like really like organ meats. I'm really into organ meats. My family's, I don't like the taste, but for health reasons, and so my wife, she mixes liver and heart with ground beef and stuff. We're just constantly eating liver and all this stuff because it's like superhuman food, right? And there's a bunch of other stuff we do for health, but yeah, I'm just not a fan that processed foods can be, that healthy. And it's kind of a personal take. I mean, if Beyond Meat was a crazy, no-brainer investment, I might look into it. All right. Alvin says, if I invest $100, will it do anything for me, or will I have to keep building it up with money? Yeah, this is an interesting topic. I think it depends on personality. I think some people can put $100 into and learn about how it moves, up $10, down, whatever, and it could be a great experience. Some other personalities, and this is kind of where I personally fit into, I put $100, I'm just not interested in it. And this is ever since I was probably a teenager or even before that. It's not very motivating, and that's where it depends on the personality. For my personality, I needed a larger kind of capital to invest, and that was more motivating, right? I need to be motivated to really get into it, and so kind of smaller capitals didn't motivate. Some people that might be the great way and the best way to do it. Another thing is, if you have small capital, maybe, and you want to get into investing, maybe trading, maybe, checking out all of Emmett Pepper's talks. Like I have a playlist of all of Emmett Pepper's chats, going through the whole thing and thinking about it at night. Who knows? Maybe that $100 can be like $1 million, right? You just need to do a 10,000x, and and you might think it's crazy, but yeah, it's people are doing it. It might take some time, and you might fail in a spectacular manner. But hey, it looks like if you're young and you're willing to go for it and risk it, there are lots of different opportunities. Do you care about the government while you're investing? Yeah, the government plays a huge role. The major I majored in college was political kind of science and economics put together as a multidisciplinary major. And one of the takeaways I learned was the economy is so complex, and the relationship with the government and the economy is so diverse. It's just, there's a lot of things that go on. And I think in some ways the Fed plays a huge role in how the economy, but also the stock market and equity markets, bond markets, how they react. So yeah, that's something that I think it's important to understand the basics of what's going on. Some people though take it to an extreme, like they think, but yeah, it's up to you to develop your own type of thoughts on that. All right, guys, I had some awesome questions here. Yeah, thanks for joining me on this channel. It's been an honor. It's always an honor to chat and to share just different thoughts with you guys. Hope you have a great week, and we'll catch you on my next live stream or my next video, and we'll talk to you guys later. Bye.